Joining us now is Eddie Ghabour. He's a co-founder of Key Advisors Group. Eddie, we are pointing to some recovery today, but if you're an investor, what are the biggest questions that you have about this market right now?
I think the biggest question really is the uncertainty with trade. So as an investor, if we have a big update today and you're overweight equities or yesterday's volume really made you uncomfortable, you may want to consider becoming a little bit more defensive and raising cash. Our concern going in this year, as we've seen this huge run up in the market, is too much complacency in the market and people taking too much risk. And now with yesterday's jolt downward, still a strong year and still a good opportunity for investors that are too overweight equities, carrying too much risk, to definitely be more defensive. This trade issue is not going away anytime soon. It doesn't look like China or the U.S. is going to blink. So I expect the month of August to be a very, very rocky month, and we're going to see a lot of what we saw yesterday. So I would not let this little pop we're seeing this morning kind of think that everything is ending and risk is over, because I think this is an opportunity to possibly raise cash.
So, Eddie, we've spent a year in the midst of a trade war with China that has just intensified in recent weeks. Are we now in a currency war too?
If we get into a currency war, that's going to be a potential disaster for the markets, because then it's going to have a total, completely global possible recession that you will see come from this. So the best case scenario from a market standpoint is that we get some type of agreement or at least some compromise on both ends. I do not believe we are going to get a comprehensive deal this year. And if investors are investing with that mindset, my concern is I think they're going to be sadly mistaken. So I think best case, we get some type of compromise, because I feel like we're kind of at a point right now where this thing can get to an area of being out of control and causing a lot of damage to the markets if we're not very careful. This is a very dangerous thing to deal with when you're talking about trade war and possibly currency wars. So don't underestimate what type of downward spiral you can see if this gets out of hand.
Eddie, if you're a mom and pop investor or a millennial looking at your portfolio, it's been a rough 48 hours. You saw the Dow lose 767 points yesterday. Tech names maybe that you loved getting crushed, like Apple, for instance, down 5%. If you are a regular investor, not a day trader, what do you need to be doing in this environment?
So I think it depends on where you are in your cycle. So if you're a young investor, as long as you're diversified, I would look at this volatility as a benefit to you, because you're a long-term investor, and dollar cost averaging into the market on down days actually will possibly reward you long-term. If you are someone that's 5 years away from retirement and you're way overweight equities, I would reevaluate my portfolio and maybe have a more income focus with dividend strategies to provide you an income stream to hopefully hedge and allow you to buy time to wait out the volatility that we're going to see. Also, keep in mind, it was a 700-point drop, but it was still only about 3%. Market's still up 14.5% year to date, so it's not like we've given back all the gains. I just think clients and individuals need to be aware of the possible risks that are out there and make sure they're properly diversified. And most importantly, they have a good risk management strategy to navigate through this. So don't let one bad decide to make an emotional decision.
Some really good advice, not making that emotional decision. Eddie, let's talk a little bit more about China and what happened yesterday, because just today, China essentially confirming that they are no longer buying. They have halted buying U.S. agriculture exports. But President Trump recently signed that multi-billion-dollar aid package for farmers. Is that going to be enough to offset the pain to U.S. farmers of China ceasing purchasing of U.S. agricultural products?
It's not going to be enough to offset it. And unfortunately, I think the farmers are the ones that have been hurt the most in this trade war due to, the commodity industry that they're so tied to. And the other thing, too, is with the devaluing of their currency, that's a deflationary thing for China's economy, because now it's going to cost them more to buy goods. And think about how many companies are multinational that depend on demand from overseas and there. So if they continue to devalue their currency, again, that's a deflationary thing that will happen, and that is not good for the global economy.
Right, especially in the U.S., where we haven't seen inflation running at that 2% mark that the Fed has been targeting for so long, despite a decade of historically low interest rates. Speaking of the Fed, Eddie, we got to get you to weigh in here. 4 former Fed heads including Janet Yellen, Alan
Fedhead, I
Greenspan,
like it.
Fed heads, yes, writing that op-ed in the Wall Street Journal, basically saying President Trump needs to cool off the pressure that he's been applying, the political pressure to Fed Chair Jerome Powell. Does that have any stickiness, you think, with this administration?
So here's where I think the difference is right now with the Fed. I believe that the Fed has always gotten pressure from whoever is in office. I just think it's a little bit different with this administration because it's more publicly put out there. So I do think that keeping the Fed independent is crucial for the benefit of our country long term. We can't be short-sighted in whether we agree or disagree with what the Fed is doing. It is important that they keep their independence and that they're not influenced by any type of person who's in office, whether they're Democrat, Republican, or independent. We want the Fed making decisions on fiscal policy based on what they think is best for the country long term, not what's best for any type of political agenda.
All right, Eddie Ghabour, we got to leave it there. Eddie is with Key Advisors Group. Thanks for joining us.
Thanks, Eddie.
Thank you for having me.